better. For the astute of you, you will recognize this as a Gravestone Doji. Slight difference. There is no peek through. That's what makes the difference between one of these and a Gravestone Doji. So, really at the end of the day, it tells you the same thing. It tells you the same thing about the psychology, and that's really what you're paying attention to. So, what's the difference between the two? Well, Shooting Star is at the top of an uptrend. It's a falling star out of the sky. It's a sign of negativity. And like the Hammer and Hanging Man, you take the trade on the break of the candlestick, in this case to the downside, and you put a stop loss on the other side. Now, an inverted hammer is just simply this. It is a hammer. I'll go ahead and put a little body here. But it is a hammer at the bottom of a downtrend. On a break above the top of this, you would recognize this as a bullish sign. Now, why? Well, both of these show that the buyers are trying to come in and push the market higher. They fail, and therefore you sell off in the case of a shooting star. In the case of an inverted hammer, you're falling, and then you go here, you try to rally, and the traders fail. And at this point in time, it looks very bearish. But what happens if the next day or hour or whatever, they break the top of it? Well, anybody who's short in this area is in trouble. So it becomes a buy signal. On the other hand, if you continue lower, that actually is a continuation signal. So it kind of serves two purposes. In that case, you'd be looking at a downtrend, an attempt to rally, and then a continuation. So it's like a continuation hammer in the last video. So let's take a look at a couple of examples. I'll walk you through. Hour chart of Bitcoin. You can see right here, it's a nice little shooting star. What does this tell us? Well, this tells us that we had been rallying for a while. We reached the previous resistance area, and you will see these most of the time as support and resistance areas. We failed to get above it, and then we pulled back. So once you're underneath the bottom of this candlestick, it's a sell signal. You got your stop loss up here, and then you aim for whatever. Now, in this case, you might have aimed for a support level, however you choose to trade it. Now, with hammers and shooting stars, a lot of times you want to see the Bollinger Band, see what they're doing. Yes, you did get overextended, so it makes quite a bit of sense. Your first target would be the bottom of the Bollinger Band. So at the very least, you're probably looking at about a almost 2-to-1 risk to reward ratio, which is exactly what you want to see. This is an inverted hammer. Now, this is an interesting setup, and I picked this one because we had dual hammers. You may recognize this from the last video. But notice an inverted hammer, the exact opposite. So this becomes a 3-candle signal in the sense that this inverted hammer in and of itself is bullish if you break to the upside. But you also have the support underneath here. So again, you kind of have to look at the what the story is that the market's trying to tell you. Here's an inverted hammer, and so is this one. That just shows that the buyers, in this case, failed, but then the next candle, they pushed it higher, failed a little bit, and then eventually broke above that. That shows real wherewithal and tenacity. That's probably the best way to look at when you get a broken inverted hammer to the upside, or perhaps a hanging man. It shows, in the last video, shows tenacity by the sellers. They are fighting and fighting and fighting. It shows that they are ready to put up a serious fight. Put the Bollinger Band on. You can see that the hammers did break down below the inverted hammer, which became its own signal. You can see. Breaking above the top of the Bollinger Band in this little bit of a squeeze on the second inverted hammer shows that we are overdone. But look at that force. You're looking for momentum in this case. And then finally here in Stellar Lumens, you can see that the shooting star formed here and here, showing signs of exhaustion. Now, why is that not a surprise? Well, it shouldn't be a surprise because we had seen so much in the way of selling pressure just above. So there's a couple things going on here that you need to be aware of. Take a look at this. Nice rally higher. Pretty significant pullback. Nice shot higher, but it's a lower high. So that adds more confirmation to a potential selling opportunity. The indicators, you could put this is your cross here. So we dipped down to here and then we crossed again to go higher. But notice right here, we have crossed yet again to the downside. That confirms it. Again, the resistance is probably the most important thing, quite frankly, but you can look at other indicators, obviously. You can see that we tagged the top here. We almost tagged the top here, so we were getting stretched anyways. So it was already kind of leaning a bit lower. Bollinger Band itself not providing a signal, but does provide a sign that things are getting a bit stretched. Certainly worth paying attention to when you look at it through that kind of prism, if you will. And then finally, you can just throw a moving average. So we'll put an EMA up. And this is a 4-hour chart. So you could do 9. You could also do 20. You can see that not only did we find support here, but as we started to drift lower, it suggests that we are possibly overdone. So going back to the 9, you can see how the shooting star formed, the hammer formed. So in a sense, you've got a shooting star, a neutral candle, a hammer, another shooting star, and then finally the breakdown. So regardless, you can see that there is a lot going there right at a resistance barrier. And I would not get too hung up on the exact pip. You're looking for the attitude in the market. You want to give it a little bit of room to breathe. You don't necessarily put your stop loss, for example, 1 tick or 1 pip just above the top of the candlestick. You want to give it a little bit of room. You weren't really threatened there. But in this case, as you are pressing what should be resistance, you could even put your stop loss as high as that. Well, then you have to look for a target. Well, what's your target? Well, maybe down here where we continue to see reaction in the market. That is still like a 2-to-1 risk to reward ratio. Again, there's a fine line between hanging on to every technical and a little bit of artistry. There's a little bit of both going on in trading, and you have to be aware of that. That's why I want to give you a framework, but I don't want to give you cut and dry, if it goes 3 ticks above the top of this candlestick, you have to get out, because that's not the case here, as you can see. So you can see that these candlesticks are very reliable, like the ones that I had showed you with the hammer and the hanging man. They're just the